Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It is February 23rd, and as always, let's get going to these charts. We're currently trading at 102.40 this morning. We are at the top end of our trading range. This is a good thing, but our support is way below us at about 101.70. So there's a lot of room for us to fall right now. We're all the way up here. We could fall all the way down here pretty darn easily. So here's what we have. Reports came out, jobless claims came in right at expectations, so it wasn't really a big mover for the bond market, good or bad. FOMC meeting was okay. I guess I threw that on green. It didn't hurt. And but there is some news about tax reform that could be coming out later on this year. So that's got to be on our radar because that could have a major influence on bonds. So I'll keep you posted in future videos on the tax reform. Okay, guys. To kind of quantify where we're at, Freddie Mac reported the average interest rate in January of 2017 to be 4.15% at a half a point. If you look at the charts, our average trading was about 102.40. Well, guess where we're at today? 102.40. So what that means is, there's really no difference to where we're at. So an average consumer may expect something similar, based on the Freddie Mac reports. So, but let's get to the forecast. Like, what's really happening here? So the analysts were pretty consistent this time, a little bearish and neutral on the short term, only because we're pushing up against that ceiling. It may be hard to break through. So short term, they're a little bearish, a little neutral. So just, they're saying too, it's good to be careful. As far as long term, they're pretty neutral on that as well. So they don't see any major movement. So here's going to be my forecast. I think I'm going to cut this trading range down a little bit. I don't think we're going to go below 102 through next Thursday or above 102.40. So my report last Thursday, I was a little bit conservative. I thought we wouldn't get above 102.20, but we hit 102.40 today. So nobody's going to be 100% accurate for sure. But yeah, I think realistically, guys, it's 102.40 is going to be a tough ceiling to break through. So if you're going to lock in today, I think you're making a safe, a pretty good call probably. So, nobody has a crystal ball, but, I'm not a risk taker, so I would take my chips and run. So anyway, my forecast is 102 to 102.40 through next Thursday. So we'll see what happens, but I think we're on the top trading of that range. So just be careful if you decide to float. Okay, and so that's it. Hey, we'd love to hear from you though. If you have mortgage questions or you just want to make a comment like what you think, we'd love to hear from you. Leave your comments down below, and also. Everything likes to be liked, so does this video. So don't forget to hit that like button. Doesn't hurt anything. And if it's your first time on the channel, at the top left, you'll see an ugly guy. Click on him. That will get you a subscription. It's free. You can always unsubscribe, but that subscription will just give you a quick notification when we record new forecasts. And at the top right is Mortgage Bonds 101. So this is a great link. If you're looking at this video, scratching your head and say, hey, thinking about refinancing or buying a house, and all of this is gibberish. Doesn't make any sense. It's okay. Mortgage Bonds 101, it's a great video, and it kind of shows you how this bond trading impacts you as a consumer getting a mortgage. Anyway, that's it for now. Have a great weekend, and we'll see you next Thursday. Bye-bye.